In my experience, there are some serious advantages with using a limited company. Lately, we've seen a surge in traffic to MoneyWise Doctor website, moneywisedoctor.com. For many, it's about keeping more of what they earn while optimizing their finances. As you can see, running a limited company gives you the ability to reduce your taxable income in ways that a sole trader simply can't. I actually see it as an investment, and it saves me future headaches from HMRC. I think it's well worth it, and the peace of mind of being compliant, very important. Is a limited company a good idea for you? I mean, are you a doctor or healthcare professional and you're wondering if setting up a limited company could be a game changer for your finances? I mean, can it help you cut down your tax bill and can it keep more of your income? Well, the truth is that it might, but it's not a one size fits all. It depends on your situation. In my experience, there are some serious advantages with using a limited company, like tax efficiency and more control over your money, but there are also a few hurdles. Talk about extra paperwork, IR 35 rules, and potential accounting costs. But stick around because in this episode, I'll be breaking down the pros and the cons and even sharing a guide with you towards the end that can help you navigate your decision. Now, if you're short on time and you want to skip ahead to the end to grab that guide or use the timestamps to jump to the parts that interest you most, please feel free. By the way, if you're new here, I'm Dr. Andy Agwim, former salaried NHS GP, investor and entrepreneur, and I founded MoneyWise Doctor to help doctors and healthcare professionals make smarter financial decisions and avoid costly mistakes. Now, let's dive in. So, why are more and more healthcare professionals suddenly thinking about setting up a limited company? Lately, we've seen a surge in traffic to MoneyWise Doctor website, moneywisedoctor.com, especially the pages that write about limited companies. We have received numerous inquiries via emails and in our community over the last couple of months. What's driving this interest? Well, in my experience, it's mainly about tax efficiency, especially for medics, doctors and healthcare professionals worried about getting caught in the 60% tax trap. For many, it's about keeping more of what they earn while optimizing their finances. Now, for example, if you're a sole trader and you're earning above a certain amount, a significant chunk of your income is taxed at 40% or more. That's a higher tax rate payer. Now, if your income falls between 100,000 and 125,140, you fall into the 60% tax trap. This happens because £2 and every £2 you earn above 100,000 means that you lose £1 of your personal tax allowance, effectively raising your tax rate to 60%. I mean, we have a blog on this that is quite detailed and is ranking #1 on Google. You can check it out with the links in the description and have a read about it. But now back to limited companies. Setting one up gives you more control over how and when you pay yourself. You can strategically split your income between your salary and your dividend, reducing your overall tax liability. Plus, in my experience, you can claim a wide range of business expenses, from professional costs to equipment, even electric vehicles, as long as they're for your business use exclusively. Now, this can be particularly beneficial if you're looking to structure your income efficiently, maximizing what you keep while minimizing your tax burden. So you want to pay your tax, but you don't want to pay more than you have to. Now, let's get into the benefits. Number one, tax efficiency. Now, if you operate a limited company, you pay corporation tax on your profits, which is lower than a higher rate and additional rate taxpayers. For 2024, for example, it's 19% for profits under £50,000 and 25% for profit above £250,000. Compare that to a higher rate taxpayer in a sole trader, 40% and above. You can't invest confidently if you are one emergency away from financial disaster. You need to build your financial foundations first. I've read over 250 books on personal finance and business. Not one of them explains specific issues that affect medics like NHS pensions, financial anxiety, investing, student loans, and much more. Hi, I'm Dr. Andy Agwim. I'm the founder of MoneyWiseDoctor.com. For over 21 years, I've been investing and studying personal finance. In fact, 3 years ago, I left my salaried NHS GP job after achieving financial independence. Since then, over 1,200 medics have joined our tax-efficient investing masterclasses that are totally free. And much more than that, 10,000 doctors and healthcare professionals have used my content to make smarter financial decisions and avoid costly mistakes. That's why I wrote The Money Wise Doctor. The Money Wise Doctor is a step-by-step guide, it's a book to simplify the path from confusion to clarity for medics and to help you make smarter financial decisions and avoid costly mistakes that can affect your future. We've already helped thousands of doctors learn how to save smarter, invest tax efficiently, and finally feel in control, in charge of their financial future. Now, if you're ready to gain clarity, confidence, and control with your money,
the MoneyWise Doctor Book is now available. Click on the link below to order your copy now and start your journey to financial freedom.
Number 2, limited liability. So one of the best things about a limited company is that your personal assets are protected. This means that if your company runs into financial difficulties, your personal finances are safe. However, for healthcare professionals like doctors, though while this is useful, your professional indemnity, like your medical defense cover, is often more important, is more crucial. Your medical practice relies on having strong professional indemnity to cover any claims or legal issues arising from your work. So while limited company and limited liability is helpful, what's most important is your medical indemnity. Number 3, one big use of a limited company is your claimable expenses. You can claim a wide range of expenses that applies to your business, and this can reduce your taxable income and put more money in your pocket. Now, there are a number of things you can claim, but here, there's a catch. The expenses must meet the HMRC's test. So HMRC has a test, and one of them is that it must be wholly for your business use, e.g. medical equipment or for training. 2, it must be exclusively for your medical practice. So you can't just buy random things and just say it's for my medical practice. And of course, it has to be reasonable. It cannot be excessive or something you're using for your personal use. So I'm going to give you a list of things you can claim, but this is not exhaustive. And again, of course, it applies. Depends on whether you've actually used this for your business. So number 1 is office cost. If you work from home, you can claim a portion of your mortgages, rent, utilities, and council tax. So use of home. Now there's 2, travel. So business travel, fuel, parking, accommodation expenses. If you stay in a hotel, they're all deductible. I mean, if you've gone for work. Of course, there are your professional fees like your indemnity, insurance, journal subscription. You could even claim your GMC, and you can even claim your life insurance. You claim it as a relevant plan and put it in your trust. That's possible. Number 4 is training courses. Obviously, if you need to do courses to advance your medical skills, medical education, these are also deductible. Of course, number 5 is equipment. Sometimes you might need laptops, software, stationery to do your job and as part of running your business. Employees, you might be able to hire admins to help you with sort of keeping up with the paperwork, and you can pay them salaries, and these are deducted as expense. As you can see, running a limited company gives you the ability to reduce your taxable income in ways that a sole trader simply can't. But of course, nothing is perfect. There are also downsides to consider. Number 1, obviously with a limited company, there's extra admin, extra paperwork. Running a limited company does come with administrative tasks like filing annual accounts, dealing with PAYE, tracking dividend. However, for me, this hasn't been a headache in any way because I use a specialist accountant who knows exactly what needs to be done, and they even send me reminders. Now, many doctors will hire an accountant, and why is an added expense is one that you can actually deduct from your expenses before tax. I actually see it as an investment, and it saves me future headaches from HMRC. I think it's well worth it, and the peace of mind of being compliant, very important. Number 2, IR 35. The IR 35 rules, you don't want to fall foul of it. So IR 35 is a piece of legislation that is aimed at preventing, workers who are supposed to actually be employees from claiming that they are working in a limited company and avoiding paying their due tax. For locum doctors, IR 35 is crucial because if HMRC determines that you are inside IR 35, you lose the tax benefits of a limited company and you'll be taxed like an employee. That can be quite big, disastrous. It can come with hefty penalties if not managed correctly. So it's important to work with a tax expert or specialist accountant to ensure that you are compliant and safe outside IR 35. I explain IR 35 in more details in the downloadable guide. You can get it at the end of the video. Number three, cost. The cost of running a limited company. It comes with its own expenses, accountancy fees, insurance, other financial obligations. Now, while these costs can all add up, it's often costs that you can claim as expenses as long as they are business compliant. You can claim them as expenses. So, for instance, if you hire an accountant and you pay them a fee, you would be able to go and claim them as part of the expenses of running the company before you are taxed. So, as long as you keep your costs reasonable and it's just for running the business, you should be fine. Now, there's number four downside of using a limited company. There's lack of employee benefit, and it's one of the most significant downsides for locum doctors working through a limited company. Is that absence of employee benefits, employment benefits. You're not, if you especially if you're outside the NHS pension, unlike permanent NHS staff, locum doctors don't even receive perks like NHS pension, sick pay, holiday pay. This means that as a locum, you must take proactive steps to protect yourself financially. So prioritize a robust emergency fund, 3 to 6 months of your monthly expense, adequate life insurance, income protection. Just become a bit more thoughtful about your own financial plan and financial stability. So, how do you get money out of the company? Number one, salary. You can pay yourself a salary which is subject to income tax, national insurance. However, working with a specialist accountant helps you to optimize how much you take in salary. For example, if you receive a salary of 12,570, it keeps you below the personal tax allowance threshold, meaning that you don't even pay income tax on that. But again, be careful, because when you want to apply for a mortgage or a visa, you may not be able to demonstrate that you make enough money to be eligible. So work with a specialist to sort that out. Number two way to get our money, dividends. So it's paid through your limited company, of course. These dividends are a share of the profits after tax. The key here is to find the right balance between salary and dividend and figure out a way to maximize your take-home pay while minimizing your tax liability. Structuring the income in that way can help you keep more of what you earn. Number three, how to get money out of limited companies, of course, expenses. So expenses like the salary you pay yourself, the salary you pay your staff, the business expenses you make, whatever you pay for consultation of professionals, memberships, travel, office equipment, and more. I mean, there's a whole list of it in the guide that I put here in the links for you to download. But make sure that it meets that HMRC criteria. It's wholly for your business. So, is setting up a limited company the right move for you? I mean, if you work outside IR 35, have reasonable earnings, and you're ready to handle or outsource the accounting work, then it could be a great way for you to save on taxes and take more control of your finances. But if your income is not that steady through your locum work, or you're not ready for the hassle of the paperwork, if you're unsure, I highly recommend you talk to a specialist accountant first, someone who works specifically with healthcare professionals, so that they can help you to avoid costly mistakes. And remember, everything here is not legal or accounting advice. It's just based on my own experience. If you're looking for an accountant, head over to moneywisedoctor.com, where you can find a vetted specialist accountant. And before you go, don't forget to grab in the links, and I also put it in the comments, your limited company guide for medics. So if you're a doctor or healthcare professional, it includes a detailed list of what you can claim as part of your expenses, as long as they are related to running your business. The link will be in the description. Now, thank you for watching. If you found this video helpful, you might also like my other video on self-invested personal pension options. In it, I explore the best SIP platforms for healthcare professionals and what you should look out for when choosing one. So don't forget to subscribe for more valuable tips and insights to help you make smarter financial decisions. All right then, see you next week.
The MoneyWise Doctor Book is now available. Click on the link below to order your copy now and start your journey to financial freedom.